Hi, everyone. My name is Ritik, and welcome to the first ever Lifetime Value podcast. I'm extremely excited to have our first guest, Carlos Arredondo, one of my oldest friends and colleagues in Mexico, who has helped me a lot in my career and is currently the CFO of Konfio, the highest funded startup in Mexico. Carlos has had a very illustrious career as part of Bank of America's emerging market sales team in New York, after which he moved to Mexico and we met each other and we helped scale Konfio together by helping them raise their Series B, Series C, along with several debt facilities and an asset purchase program. Currently, Carlos is managing a cross-functional team of accountants, securitization specialists. And today he's going to help us understand what it is to be part of a high growth startup, especially in the Latam region, and understand what it is to be raising capital in equity and debt. And finally, talk about the trends in the Latam market, given the impact of COVID. And we'll round up with some advice he may have for future founders or people who might want to become CFOs in the future. So without further ado, please welcome Carlos.
Hey, Ritik, how are you?
Hey, Carlos, how are you? Well, great to have you on the podcast. Thank you for taking time out to do this. I'm very excited to speak with you. And I hope that we can go about sharing some interesting experiences that you have. So perhaps we can get right into it. Maybe you can walk us through your this massive career change that you made when you were back during your banking days, and what made you come to Mexico and join like a 15-person startup called Konfio at that point of time, and talk us through what your journey has been like so far.
Excellent. Happy to share and a little bit about my background. I'm originally from Colombia. I moved to the States for my undergrad, and I, given the situation in Colombia at that time, I had to start working very early. So I've literally worked in banks. For some reason, I remember the exact date, since April 23, 1999. Wow. So I spent a lot of my career working in banks, everything from starting as a teller to, finishing my career in banks as a managing director, running the emerging market sales team for Latin America. And, I can't complain. It was a very rewarding experience. I got to travel all over Latin America, helped, banks and pension funds and insurance companies and with their financial needs and pain points. And I also made a lot of friends, clients, employees. So it was a very rewarding opportunity, but it got to a time where I saw David, who's a personal friend and who we used to work together at Deutsche Bank, start Konfio, seeing how companies were starting to try to figure out solutions for the pain points that consumers and small businesses have dealing with financial institutions. And I'm like, this sounds great. I think if you remember, we even spoke at that time because you were considering a change. And, I could have stayed in a very comfortable job, making, good money. And I wasn't enjoying anymore what I was doing. I wasn't coming to work and being like, yes, I'm, having productive meetings. And I saw in Konfio a great opportunity to solve something important in Latin America, a big pain points that clients have. And I took the risk and joined them in 2016.
Amazing. I couldn't have said it better myself. And in that sense, we kind of share a lot. Moving to Mexico was also risk in that sense for me. And it was great that two people who were in a very similar situation met each other. At that point of time, we had, I think it was a team of 15 or maybe 20 people that we had. And I remember that within the finance team, it was just me and you. And we were given this massive task of like, okay, we need to get our company's numbers towards a single source of truth, while constantly speaking with investors and at the same time managing cross-functional reporting. And I also wanted to know from your perspective how you felt that, and that was in 2016. Now that we are 4 years later, 2020, how you feel about it now?
It's funny that when you make such a move, you can't quantify the risk or try to get answers to all your questions. It takes literally a leap of faith of, I believe in the strategy, I believe in the CEO and CTO, the co-founders, and if you get the right people together, you can make it happen. If you know a little bit about my background, I'm not the traditional CFO type. I'm not the traditional accounting, financial reporting, especially in a SOFOM in Mexico, provisioning and all the regulation required by the CNBV and Conducef. So it was literally a reality check as soon as I joined Konfio and I met you, and we're like, okay, now we're here. My dream was try and sell Konfio all over the region and help David expand Konfio. And then I get to Konfio and I'm like, okay, now we have this responsibility of building a finance team, giving structure to our financial group, accounting, compliance, legal. But it was very exciting and rewarding. And you were a big part of it.
Hats off to David and Paco for entrusting the two guys who didn't know anything about Conducef and SOFOMs as being in charge of the company's reporting. Maybe you can walk us through a day in your shoes as a CFO these days, where Konfio has become this behemoth.
No, good question, and a lot has changed. I think that what makes my role and working at an early stage company exciting, it's always evolving, it's always changing, and I think something I was looking for in my life is that you had a strong impact in the decision of where the company is going, and in Konfio with David, Paco, and the rest of the team, are my input and the input of the management team. You can see the results, and you can see how the company is changing and taking your ideas, and either by what's the strategy is going to be, or by the people that we're bringing to the company. So I think that what probably differentiated from a traditional CFO role is that yes, you do have to do the traditional, like, financial statements, auditing, provisioning, and what a traditional CFO and finance team function will do. But you also get some of the more, front office business, exciting projects. So as you probably remember, we, in the finance team, we also look at growth and how do we grow through strategic channels, through strategic partnerships. We also looked at the legal and compliance part, which was a huge learning opportunity for me. So you get to support the CEO and our CTO and the company, not only in the finance function, but also in growth areas. So which channels should we grow? You get the opportunity, which I think it's quite interesting, on giving an objective opinion about things. Yeah. Because in a regular company, like, the sales team wants to sell more, the product is trying to, they believe in a product strategy or a specific product, and they want to make sure they position their product better. And then the finance team, is trying to push for lower costs or better unit economics. So everybody has a different angle. And wearing the CFO hat, or coming from a finance function, it's interesting that you can help not only on the growth side, but you can give an objective opinion about different initiatives. So it's that was also and has been very rewarding.
Very true. Yeah, that was very well said. In my very, very brief stint as a interim CFO, that was an amazing challenge to have, where one day you're required to wear, like, the legal hat, and then the next day is completely different, and you're talking to the partner at this massive venture capital firm where you have to sell, and I love that challenge, and I'm sure you have also grown and experienced a lot in this. Now, switching gears to one of the sort of more, I would say, like exciting aspect of being CFO is capital raising. And as of now, Konfio is the highest funded fintech startup in Mexico. I wanted to know from your perspective, having joined at such an early stage, how the process of capital raising has been for you, the difference between things like equity and debt, valuation. If you could just sort of walk us through like the ABCs in that sense of capital raising. And it's also a question that I tend to get from a lot of people when I talk about my experience at Konfio is, how did you do it? Perhaps you could explain a bit of that.
I would divide the part of capital raising into, the qualitative part and the quantitative part. So on the qualitative part, I think that David and Paco did an amazing job. They're making an investment in you and you're making an investment in them.
Yep.
And choosing the right partner. And, you have no idea how it's been so important in this COVID situation of like partners that add value to the operation in different angles has been, crucial for Konfio. And I think David did it at the Series A and we continue doing it to this day in trying to diversify our equity cap table and our debt lenders in partners that are going to help us not only through rough time as COVID, but also in the value they bring to the organization.
Yep.
Either because they bring an expertise in the product side, in the finance side, because they have, for example, we have an investor that has a strong background in emerging markets, countries similar economies to Mexico. So that brings an important value to Konfio, and we can brainstorm ideas and learn about their experiences. So I think that, on the qualitative side, choosing the right partners and building a long-term relationships with them, it has been crucial for Konfio. We don't see capital raising as, okay, I'm going to do a deck, I'm going to pitch it to 10 guys and see who's gonna invest. We see it as a long-term investing in keeping investors updated, trying to partner with investors where we see they can bring value to the organization, just having an ongoing relationship with them. Even investors that were not part of the Series A and B, we probably kept them updated and they may join on the Series C or D. So that on the qualitative part. On the quantitative part, I think it's both science and art. It's, equity. It's I saw it in one conference recently where an investor said that debt is the cheapest form of equity. So, you have to balance it out between, how much equity do you really need for what you want to do and where do you want to go? If it's either, extending runway or trying to reach a certain, revenue goal or open a new market, open a new channel, open a new product. So it's not, let's raise as much equity as at the highest valuation possible. That's not how we operate or how, in my view, how startups should be funded. It's okay, what exactly are we trying to do? And how do we optimize to give our investors, the best return in terms of how much equity versus debt we should raise? It's obviously, it's not ideal. In some cases, you may end up raising, too much equity and then you don't need enough debt, but it takes you to the next stepping stone, or you could do less equity and raise more debt. So it depends on a case by case situation, but I think it's a good balancing act to make sure that you achieve your specific roadmap goals in terms of funding or specific revenue or profitability targets, and being honest with yourself in terms of unit economics. What's my real cost of capital?
Perhaps you could explain how that process was when you raised $100 million. Is like, why 100, and how did you guys end up deciding what was the right amount of equity to give, or what was the right valuation at that point of time?
The way we see it or we approach it, you come from a financial background in terms of like bid offer or how much people are willing to pay for something, how much people are willing to sell. I think that that same theme works in startups. It's more of a gray market where it's not like a stock where you can see the bid offer price on screens and maybe a few bonds, but or FX, but in the it ends up being a formula about how much people are willing to pay for a certain asset and how much value they see in it. And in terms of the management company or the equity holders, how much dilution do they want to accept, at what valuation. But I think the way we try to approach it is more of okay, how do we come up with a plan that makes sense for the company together? Okay, these are the goals that we want to achieve. This is where we want to take the company. And we think that with our product strategy, with the right team, we want to get to this amount of revenue or this market share at X point in time. And to get there, we're going to need, X amount of people. We're going to need to invest in talent, product, and, all of these initiatives. How much is that going to cost? Or how much money do we need to get there? How much runway do we need? And then trying to do it in terms of like, what's the end point, and then work backwards from that. And if with an investor and the company, there's an openness to work on scenarios that make sense, and versus you could have a scenario where an investor may say, we want higher growth, or we want X or this returns, or we want to achieve certain goals, and the company may not agree with it, or the company may be more conservative, and there's a consensus as to where do we want to take this, and you come to an agreement of how much cash you're going to need, or how much funding you're going to need, and how much would that come from equity, and then that trickles down to, okay, what is that going to represent in valuation? And there's multiples that you can look at in terms of what are companies paying for more fintech players. There's a few reports that are public. There's a range of multiples around, which is still a very gray area, and especially in emerging markets. And I believe that David has managed it very well in terms of, like, we all want to win here. We want clients to win with a great product. We want investors to make a great return, and we want the company to do well. So it's not, okay, let the company make the highest return, and then investors are going to get screwed, and the end client, may not have a good company for a long of time. So I think David has done a great job, and Konfio, at how do we balance this to make sure that we all win.
And what normally happens after you raise? A lot of people believe that, once I get the term sheet, once I get the cash, it's all going to be smooth sailing from there. But in reality, that's when the real work starts. So, maybe you could walk us through, what are the challenges that happen once you raise?
That's also been a great learning curve. And I'm sure you remember, like on our first days, we were busy building financial models to see how we can run the company better and help all the different teams. As we expand and you get investors, you institutionalize your work, and you wear two hats now. How do we continue to help the company grow, institutionalize, processes, procedures, unit economics, and the different teams, and recruiting, and everything else. And also, how do we institutionalize our investor reporting, our board decks? All right, you remember the fire drills of, how do we get all of this ready on a quarterly basis? And, we always like to keep, at least in Konfio, a very proactive approach in our investor reporting, both on the equity and debt side. So we're strong believers in over communicating. In good times, in bad times, you want to keep them informed what's going on, and board meetings you know, uh, are a great opportunity to get even more insights from all these investors who have similar companies all over the world. But as you said, once you close, that's when the real work starts. And
Mm-hmm.
David mentioned something, or Gregorio on our team, that um, once you close your rounds, then you have to prove your valuations. So it's
Correct.
not like, okay, let's. I always found that interesting when people celebrate the rounds when, yes, you raised X amount of money at whatever valuation, but the tough part is making it happen,
Correct.
executing.
Now, moving on to the other aspect of the CFO job, that's also very interesting is reaching profitability. How important is profitability in this current COVID climate?
The whole COVID situation, it's a wake up call for early stage companies, even mature,
Mm-hmm.
companies, that profitability and unit economics are extremely important. I hope a lot of startups are going to make it from this crisis. A lot are going to suffer. And I think it's a good reality check for all companies to ask themselves, like, what are my unit economics? What's my roadmap to profitability? And you may choose proactively to delay that, because maybe you're launching a new product, you're coming into a new market, but if your existing channels or products are profitable, you may take the risk to invest in some other initiatives. But I think that profitability and solid unit economics
Mm-hmm.
are now more than ever extremely important for startups. Not only on how they manage their business, but also, I'm sure, on how investors, you know, look at businesses. I think that the world where, you can grow at all costs and think that funding
Mm-hmm.
is going to be limited, are gone. And at least in Confio, we're extremely focused on, profitability, uh, solid unit economics, granular detail of,
Mm-hmm.
all of our products. How do we, that's the value that finance teams have to bring to the table. How do we help
Yep.
each team get a deeper understanding on their unit economics, on projections, actual versus forecasted, how they're
Mm-hmm.
looking, where they're going. So I think this is a wake up call for all startups to be more conscious about profitability.
Yeah. Couldn't have said it better myself. Which also leads me to my next question. Given the economical or the macroeconomical impact of COVID, what sort of trends are you seeing in the growth of credit in a traditionally credit averse society like Mexico, where nobody wants to have a credit card because several financial crises that have struck the country before? How do you see the appetite of small, medium enterprises changing in the future, and how do you think, or how is Konfio adapting to that?
Well, I think that this brings a huge opportunity for all the startups that are trying to digitalize different parts of the economy. We see this as a amazing opportunity for us to gain market share, to close strategic partnerships. Uh, the world changed. People definitely don't want to go to a bank with X amount of people sitting right next to you with all of
Yeah.
this COVID situation. If you can buy groceries online, if you can watch movies online, you're gonna do your financial services online. And this accelerated a lot of the digitalization of different services. I'm sure, like Rappi, Uber,
Mm-hmm.
Justo, and a lot of players are probably doing very well on most of their digitalization businesses. And we see this as a huge opportunity to get closer to clients.
Okay.
We want to be there for them when things are going well, and we want to be there for them when they're having a rough time. And we're a
Mm-hmm.
data driven company, and as you know it, and we can get real-time information on how businesses are doing, and if we can help them and build trust with them, we think we're making an investment in the future of that relationship, and that client will stay with us, will grow with us. So, we had a few initiatives that we wanted to grow, and this situation helped us accelerate our deployment of a small business tool called Compass. We're also doing more, technology services to large corporates and financial institutions that need help digitalizing their services for SMEs. So I think it's a great opportunity for startups to disrupt different markets. It's also a difficult opportunity to fundraise, but if you have a good business idea, strong unit economics, you understand your clients and market well, you're gonna do well. Like the largest companies in the world started when in the middle of a crisis. So we're trying to expand our business and grow in this crisis. So it's going to be interesting the next at least 12 months of how the market develops.
Absolutely. And before we wrap up, I just wanted to ask if there's any other parting thoughts or any other advice you wanted to give aspiring founders or people who want to become CFOs like you. What would you tell them? If there was something you could have done differently, anything you want to share that could help somebody avoid any mistakes or give them more inspiration.
Good question. I think that it's not an easy change to go from like a large corporate job or a traditional job to a startup, and it may sound sexy and exciting, but it's definitely a lot of work, and you really have to have passion and love what you're doing, because it's a long-term investment, and you may get a financial reward in the future, but you really have to do it because you really believe in the mission and the vision of your company, and that's what we do at Konfio, and we really believe in what we're doing, and really trying to help SMEs and looking at their specific cases. It's like you have to really fall in love and be passionate about what your business is doing, and especially with all this COVID situation, a few ideas, staying humble, being objective and realistic of what are the unit economics of your business, how do the numbers look, what exactly do you need to do, what are you going to invest on, what or how much runway are you going to need. Be really objective and raw about your situation, your numbers, and seek advice from people that there's a big ecosystem of startups, so people that want to help, of investors that are extremely smart. One of the most rewarding things in Konfio is being in a board meeting and learning about all the stories and companies that are shareholders and markets that they work on, and sharing ideas with very smart people and that have a lot of experience. So stay humble, seek advice, stay hungry, and get really good talent. I at least in my case, in the finance team of Konfio, I've been able to build a really strong finance team, and these guys make a huge difference in the company, and they help my job be easier, and then I can move on to do other things. And I'm not as good as Ritik doing comedy shows, so I have to figure out how to do better. But that would be it.
Got it. Well, thank you so much again, Carlos, for taking time out. This was so much fun. And to all the listeners, please feel free to reach out to him. He's extremely friendly. And thank you so much for listening into our first ever episode. And I'm really excited to do this on a weekly basis. And this has been Lifetime Value. Thank you so much, everybody.